Single Ortiz, we are live. Are you ready to do this thing, brother?
Yes, sir. Let's do it.
Welcome to the Administrators Podcast, featuring your host, Mr. Kendrick Thomas, and my co-host, Mr. Jose Ortiz. This information is used for educational purposes only.
What do KTTV? This is KT, and I'm coming at you live with another episode of the Administrators Podcast with my co-host,
JoJo.
Look, man, and I was just about to give you some props, bro, because the last time I looked on the line, I was like, well, man, it did look a little fast online. So I was like, maybe it worked out, man. But we all good today. How you feeling today, brother?
And I'm feeling good. Good to be here tonight. Good to be
here. We in this home stretch. For all the educators out there, please believe we are in this home stretch. Y'all just hold on. We almost there, man. But I'll tell you one thing.
Almost, baby.
Woo. Kids is as anxious and nervous as we are about getting out this time, man.
Mm-hmm.
I think, and the thing is, we may know how to verbalize it, but they don't. And then that's when it was getting real in the field, man.
That's right.
So look, man, here tonight, for everybody who is just joining us, who have not been a part of the hustle or the grind, me and Mr. Ortiz said we got to do something, man. We learning all this stuff in the stock market. We do understand that this is a way to financial freedom, and so we said, why don't we bring other people along for our learning journey, right? And so when we thought about the people, we said, man, we are educators. Who else but some of the most remarkable individuals with the incredible potential in the world would it be besides other educators, man? That's what we do, brother.
Every day.
Hey, look, man. So, like I said, I'm so excited tonight. We listened to the crowd. They said they wanted options. They said they wanted charts. So what does the man Ortiz do? The man pulls out the charts tonight. So hold on. I'm looking forward to these charts tonight, man. I hope y'all ready. This is what y'all asked for. Next thing you know, we'll take a look at our heat check tonight. We got a little bit in our fear, greed index, and I'm gonna pull out the VIX tonight. People didn't see the VIX yet. So we're gonna take it a step further in our heat check tonight. So I hope everybody ready for that. Man, before we get this thing jumped off, man, with the news, anything you got to say, bro?
No, I just got to say, man, it's good to be here tonight, KT. And, man, I'm excited about trying to go through some charts with some people out there and then, just trying to make things happen. Like Kendrick said, man, got to keep tight. We're almost there to the end, y'all, for this first one. Ooh, just keep your cool in everything you do at school.
Keep your head up. Hey, man, look, we got... All right, y'all. Let's get to a little bit of this news. All right, so for tonight, looked at, hold on, let me go over here. What we're talking about tonight is the economic outlook for 2024. And so as you listen to us all the time, and we talk about those bonds, we talk about the stocks, we talk about T-bills and chills. Y'all know we can talk about all that stuff. So what's going on? What are analysts seeing for 2024? And so remember what I said, you always want to have different pieces of data. A lot of people say confluences. So we listen to what they say, but we take it with a grain of salt because here at the Administrators Podcast, as you know, we learn to do our own research and fish for ourselves. All right. So the key takeaways from this, they saying that the U.S. economic strength may boost global growth. And so we'll talk about a few of the countries that could benefit from that. Interest rates, if y'all don't know, them things are through the roof right now, right? And so they're saying that next year we can expect the interest rates to return back to 3 and 6%, preferably 3%, because it's real out here. I don't want to buy nothing. There's a window of opportunity to move cash off the sidelines. Me and Jose were just talking about soon. That will be a dip. And what will you do when it happens? All right. And so thinking about what's coming up next year, election year is on the rise. So how are we setting ourselves up to know that history does repeat itself? And what ways will the market change for us during the presidential run? All right. So it says under the elevated inflation and high interest rates, the world's major economies are diverging, right? And so when you think about the United States, Japan, India, all of these are what's going to help boost the global outlook for 2024. While ongoing signs of weakness in Europe and China are tempering expectations for the new year. Mr. Jose, I don't know if you know anything about China, man, but have you been looking into any of the yen?
I have not, because I've been looking at that crypto though, but I've been looking at that yen though. So I'm
Looking
not
at the
familiar
yen.
with that.
So I'm not gonna lie to you. I have been buying YCL very, very slowly, just a little something on the background. Because what's happening is they had a law in place that has really been hitting the yen, kind of like raise interest rates and all of the stuff that's going for us. And so what's happening is now that they've tightened so much, they are getting ready to change this policy. And so once that happens, then all the money comes back and the yen goes up in value. I already got about 5 contracts, man. I'm just putting it out there, man. Get you some yen, y'all. We try to get it in, y'all. All right, so now back to the story. So the resilience in the U.S. economy, particularly, really has been remarkable, and I agree about that. Right, when you see consumer prices have gone up, the Fed has raised interest rates, yet we still keep spending. It's a testament to American consumer and labor market durability. Now, if you look at it now, the data is kind of showing a few cracks, but that's what they wanted to do, right? Because the more that the system crashes on its own, the less they have to do. And I think we are doing a good job and still running up the bag. The world's two other largest economies are Europe and China. And so, once again, they're expected to weigh on the global growth as they both struggle. But Germany, the biggest economy in Europe, is already contracting due to a sharp slowdown in manufacturing activity, warning demand from China, which is his largest trading partner, right? So remember what we said. China is struggling. That's where everything happens. That's where a lot of our companies. So always be able to kind of have that outlook. So basically, the interest rate outlook, he says, while going back to the old normal, interest rates are impacting economies in different ways. The chances of a sharp decline in rates are diminishing, right? So when I think about this, I think about my TMF. What I'm saying is once rates start to cut, TMF goes up. We thought it'll be fast first quarter, but talks like this make it sound like it won't be the first quarter where they'll cut rates. I think they'll hold them a little bit. He says, I'm optimistic that consumers will continue to carry the economy even as rates remain higher for an extended period. That's not good for TMF. That's not good. That's partly because wages and home values remain above pandemic level. Jose, you still got your house, man. Are you above pre-pandemic level?
Yeah.
Getting that bag.
Yeah. So I'm fortunate. So.
Hey, man, look, man, I ain't gonna lie to you. When they told me I was above anything, I told them I'm above. I'm out. All right. So basically, y'all, just wanted to kind of give y'all a little bit of this outlook, right? The market will keep going. A federal spending spree, especially on infrastructure projects, has also supported economic growth, right? And so, once again, if you're paying attention to this news, the things that we're showing y'all, this is how y'all can grab the bag. So, I want to close by talking about the window of opportunity to move cash off the sidelines. So, I always tell people when they want to invest now, the market is at an all-time high. Now is not the time to look at investing unless you're getting something like bonds to where we're looking at what goes up when the interest rates come down. Other than that, this is what you want to look at. When are those small opportunities for me to move cash off the sideline? And so, assuming most central banks are done or nearly done raising the rates, that presents an opportunity for investors to get off the sidelines. The exodus from stock and bond markets into cash over the past few years was understandable. It's been crazy out here, y'all. But now, for those who remain uninvested, you may miss out on the opportunity to position your portfolio for long-term success. So, historically speaking, the time between the end of a rate hiking cycle, we coming to it like the dude speak in like 2 days. I'm just pay attention. The time between the end of a rate hiking cycle and the initial rate cut has signaled a crucial opportunity for investors to redeploy cash into stocks and bonds. In the past, that window has lasted an average of 10 months. Jose, they say we got 10 months, man.
10 months.
10 months to get the bag together for the rest of life. I will end this by saying, according to this guy, I believe we are on the cusp of a major transition where long-term investors can find attractive investment opportunities in stocks and bonds, says Mike Gitlin, President and Chief Executive Officer of the Capital Group. Y'all, his only job is to tell people how to get their bag. That's his only job. So he says he believes the opportunity is coming, y'all. Powell is coming on Wednesday. They probably won't raise rates. Last meeting of the year, they probably will say we're going to pause because they want to keep looking and see what's happening. But after that, they come to cut, y'all. I hope y'all ready. Anything you got to say before we close out this segment?
I think that, when it comes to what he was saying about the whole getting ready to put your money to work, whether it be stocks, bonds, whatever, I think as you see where the market has gone, in the past recent weeks, months, and then when we take a look at a couple of charts later on, you can definitely see that we began to peak and we're going to start looking for a downward movement, not necessarily a crash, but just something to where we can keep an eye out for that bit of a downside, downturn, little bit of a pullback. If you follow us on social media, on Instagram, we've been talking about a pullback. We've been talking about certain stocks to watch for a pullback. So as we get to that pullback area, start thinking about, researching and figuring out what you want to do, especially with some of those big name tickers. So that's what I'm looking forward to looking at right now, seeing what I have, because people are going to start selling when it comes to the end of the year. So if we get a little bit of a jump between now and then, expecting a little bit of a sell-off, because people are going to throw away their duds and everything that they lost money on. It's just part of clearing that capital
Tax
gains
loss
for the end of the year.
That's it, man. All right, y'all. So what we'll do, take a quick break. I told y'all, we talked about our heat check. So we'll take a look at that heat check. And I want to see if we see any similarities between next year. We'll also look at our fear and greed index that we looked at last week. But tonight, I will introduce something new called the VIX. So look, those three things that I'm just laying out on y'all. Oh my God. Just knowing these three and how. We'll be back.
You see the drippy, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drippy, I'm fitted up. Hop in my car and the...
All right, y'all. Welcome back to another episode of Administrators Podcast. Look, we are in the building. I want to say thank everybody for who is here. Please make sure that if you have not, you share, subscribe so y'all can know when we go live. We want to keep everything going. What they say, Jose, hit the bell, do something like that. Do the bell, all that good stuff. All right. So today, Jose, you know what happened though?
No, I know what happened.
I pulled the thing up, but we didn't do no intro. Oh. Look, y'all. Now we are back. Let's look at this. Oh, here we go. Back at the heat. First off, I need everybody that's on here in these comments. If you have looked at this heat map anytime since the last time we've been on here, please put something in the comments. If you have went and checked this on your own, just to get your game up outside of when you're working with the administrators. All right, now this is what we got right here, brother. Wasn't this down last week?
Yeah.
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 No.
Mm.
Oh my God. Did you see this?
Mm.
Dude, I had this on the watch list, bro. I was gonna buy 5 of them at $915.
Mm.
Dude, today they are $1029. All this happened in one day today. One day today, bro. Come on, man. This is it right here, y'all. So basically, we're back at the heat. Hold on, let me get here. I just got so sidetracked, y'all. I apologize. All right, so this is our S&P heat map. For anybody that don't know, all right, this is a visual representation of sector performance. So look at your technology sector. Let's go back through it. This is our technology sector. How did it do today? All right, so then it kind of gives us some companies. So we can tell from this, Microsoft had a not so great day. But what was going on with it? Why? Was it a healthy pullback? Is it crashing? What's going on? Looking at this heat map helps you to know that, hey, this maybe I should be looking, right? Green indicates the strength. The red signals the weakness. It's like a traffic light for the stock market. Remember what I told you, giving us a quick snapshot of sectors that are thriving, boom, versus sectors that may need just a little bit of attention. Boom. My God, what is you gonna do? I don't know if y'all do any drug manufacturing, but look at this. This is what a healthy pullback looks like, because Eli Lilly has been running like the gingerbread man. Right? Look, when we say we stay safe over here, we got Berkshire. I remember looking at Berkshire when it was like 220. Look at it, 357. This is Warren Buffett right here. So Apple is probably a big piece of this. Just you know. So anything on the heat check? Jose?
You know, going back to Microsoft, just so you know, if you've been following social media, we've been saying pull back, pull back, pull back. You know, it ran, it's been up, it's all-time highs. You know, now we pulled back from its high of 384. You know, we're at 371. So, you know, we're good. Apple also down. Apple been down for a week now. Apple also crossed its all-time high back around 196, 197, getting close to 200. Little pullback in the past week. You know, Nvidia was up as well, now down. Now, if you go over to AMD, you can see that AMD is still in an uptrend. We've had 3 solid trading days of being in the green, but that's because they made some fantastic announcement about AI. And so now, here coming pretty soon, AMD will probably experience a pullback as well. So just keep that in mind. Red doesn't always mean bad. You know, it all depends on why there's a big shift from the up to the down. So just make sure that you follow up, you do your research on those stocks, and you know, just the worldwide news that's out there. You know, because there's a lot of things happening right now that could affect everything that we do in the stock market coming up.
Most definitely. Looking at still oil and gas, still struggling over here, right? We know the world is not ready for EVs yet, so we still gonna be making a few gas cars over here till we get ready. So I think that's always our opportunity in the right situation. Financials another thing, right? They JP Morgan Chase, look at it, 159. Dude, I bought this when it was 158. I bought a January call. I mean 148. Come on, man. We in here, y'all. We are in here, y'all. All right, so now that's one piece. The next piece that I want to show you all is the fear and greed index. And so once again, if you looked at this outside of the times that we've been together, gonna drop you something in the chat box here. Drop me one. No, but Man, look. I said I ain't see no one. Oh, hold on, wait a minute. Let me get back to my fear and greed. Y'all be nervous. Okay, what we looking like, Jose?
Man,
Where
we are in the greed section. We are getting toward that extreme greed, even more so than we were last time. Because now the market is pumping. The market has some hot spots. The market's making some moves to the upside. So that tells me one thing, KT, that as soon as we get there, we're going to get to a sell-off pretty soon. Like
man,
you
I'm
were
telling you.
saying, it could be a
Now,
pullback.
so there these and for the people that don't know what this is the fear and greed index. It's a psychological thermometer for the market, right? How everybody thinking in their head. And you seen all that green that was on there. People is out here getting money.
Mm-hmm.
But the thing is, when investors are this greedy, it might be a sign of overconfidence, right? When fearful, it can indicate caution. So understanding these emotions help you kind of gauge the overall sentiment. So right now, with the extreme green, remember what we just said. Okay, you say, what do I want to do? Do I want to go with the market or do I want to go against the market? I just showed you. Oh, I can't wait a minute. I can't come over here and just switch the screen like that. But we just looked at the S&P heat map, right? We see, okay, it's green. Now, people must be buying. They out here get money. We come over here to the fear index. We say, whoa, people are looking greedy. We must be out here getting this money. Now, the last piece that I want to take us to for today is, and this is the new piece that I want to introduce us to, and it is called, hold up, wait a minute. Here we go. It is called the VIX Volatility Index, right? And so as we introduce this one in the new, hold on, wait a minute. Let me check my time in here. Oh, yeah, we're doing good time. All right. So as we get ready to look at the VIX, right, I want to kind of just give y'all a little bit about it. So the VIX or the volatility index is a crucial tool for investors as it measures the market volatility, reflects the market expectations for future volatility, right? And so looking at the indicator of market sentiment, the VIX is often referred to as the fear gauge because it reflects the level of uncertainty or fear in the market. When the VIX is high, it suggests that investors anticipate large price swings, indicating a more volatile and uncertain market. The VIX is not that high, y'all. Oh, now look at this though. Look what happened today. It did rise up a little bit, right? So in general, a high VIX indicates that the market is in a state of panic and fear. A low VIX may suggest complacency or overconfidence. So remember, you just heard that word inside of our fear and greed index, right? Overconfidence. So we once again, let's take it back. Our S&P chart, heat check, just showed us all this green that's happening. So people are confident that people are buying. So everybody's buying, everything is going up. When we look over to our fear and greed, we say greed. Okay, everybody is buying, everything is going up. And then we come over to our VIX, which is our last sentiment, right? Now, with everybody buying, with everything stable, how is the market sentiment? Is everybody nervous or is everybody calm while this going on? Our VIX is what tells us if everybody is calm or not. And so the biggest way I can equate that is with all that green going on, I won't say we're coming close to a pullback until the VIX starts going up. Would you agree with that, Jose?
I would definitely agree.
Yeah.
We've seen in the time that we've been trading, we've seen it hit 30. COVID times, it's been a while, but COVID and then even after that with inflation, we've seen the big spikes, and so something to keep an eye out. Once we start getting to that 14, 15, people are going to start, making some moves, and as we inch toward that 20. Personally, I don't want it to get there, but hey.
Hey, we know what goes up
Oh yeah.
will come down. All right. Just another thing about this VIX. Like we said, changes in the VIX can be a timing indicator. So a significant increase in the VIX might signal that potential market downturn. So remember what I said, when that start growing up, that's when you start getting worried. So even with the market going up like this, as long as the market goes up and this stays down, then I'm in. But once this goes, whoa, now we got a problem because now people start getting scared. So they're gonna keep on getting money, but they're getting scared. And so this is just another tool in your toolbox that I want to share with us for the VIX. Just remembering, understanding the VIX adds a psychological dimension to the market analysis. All right. So now you're kind of looking into the mind of traders. Are they making money scared? Or are they making money comfortable, calm, and cool? With the VIX down at this low, everybody is calm, comfortable, and cool. So once again, we just went through the heat check, we went through our fear and greed, and then I introduced you to this VIX. Please add those to your artillery. Can I say that? Can I use that word? I get that. Please add that and utilize it. Don't just add it, use it, people. All right, man. Anything on that before we close it out?
No, that's good. Good work there, KT.
Look, man, we just try to keep that thing rolling. And we love the people, man. Hey, all right. So what we'll do when we get back?
They call me peoples.
Hey, you gotta love my people. Hey. All right, bro. That was a good one, bro. That kind of made up for the lateness on the JoJo, bro. All right. So, people, when we get back, we're gonna take a quick break. When we come back, Jose, y'all asked for this. I don't know who asked. Maturo, I'm gonna say this is your fault, Maturo. If you out there, this is totally on you. Jose is going into the bag in the Robinhood. He's gonna pull out some charts. And so tonight will be our first bit of technical analysis. Y'all are lucky. I did not have a chance to put together an intro for this one, so we just gonna slide straight into it today. But y'all better believe it's coming back. Hey, look at hold on, Matero. She said I did. All right, thank you so much. Let's get this going in. All right, so yeah, y'all, we'll be right back. Now.
You see the drip, yeah, I'm fitted up. Hop in my car and the giddy up. Secure the bag, yeah, I get the bus. Pick it up, pick it up, pick it up. You see the drip, yeah, I'm fitted up. Hop in my car and the
All right, y'all. Welcome back to the Administrators Podcast with KT and
JoJo.
And I feel like that one was gonna be a good one. I think you got to see the playback to see when they ran, but I think we're gonna have to give you a hand clap, brother. Showed up on time. We appreciate that, man. All right, y'all. So what we're going to do, Jose, you ready to share?
I sure am.
All right, so we will get into some. Hold on, wait a minute. Okay, there we go. I think it should be on you. We're about to get into some technical analysis tonight, kind of look at a little bit of the screen. And so
can y'all see the screen?
Not yet.
Oh man.
But without further ado.
Who? Oh man, can y'all see that?
This is what y'all give it to him, Jose.
Hey, there, y'all can see that, right?
Yes, sir.
Oh man. All right. So we're gonna take it easy. We're gonna go a little slow. I want everyone to become familiar with just what the chart looks like. So what I have here is I pulled up a chart from Microsoft. One of the things that I want you to notice is this big number right here. We are up $128 for the year, almost 50%. If you can see, the way that the year-to-date chart is flowing, it's definitely going to the right in an upward movement. Like we talked about earlier, it is in an uptrend. We hit a high of 360. earlier this year in July, but then, as I mentioned earlier, we hit a 384 on November 29th. So now you can see that today we are in the 370s. And so let me take you to the day chart. So today, 371.40. We didn't have much of a breakout, 10 cents for the day. So one of the things that I want to show you on these charts, so now we can actually start looking into them. I'm going to go to the 1 month. On the right-hand side, as y'all can see, we got all of our numbers here. We got our price. This is our price movement. So everything on the right indicates price. When you hover over the actual chart, you can pinpoint different price points that you want to see. Your crosses, your mouse, your clicker, get it over, hover it over, and you can see different price points. We are moving in an upward direction even on the 1 month. So one thing that I wanted to get everybody familiar with, a couple things on the chart. We have our price, of course, and then we have our volume. These big green and red, bars at the bottom are the number of volume that we have. This is a heavy red back in November. And so here you can see that we kind of steadied out with the volume. This was red back this day because they sold off in the previous, right before the news hit, when they went up for having the Chat GPT guy come over. They did a little sell-off before. So here we go with the little volume indicators at the bottom. So remember, the higher volume that you can get, the more volatile the stock will be, which could play into your favor. So just keep that in mind. Next thing I want to talk about is, we call it the MACD. We got a 12.26 and 9. MACD is a convergence that deals with, working with our 12-day, 26-day, and 9-day. When we have those confluences meet together, we can either have an upward movement or a downward movement. MACD is moving average, convergence, divergence. That's what MACD stands for. Moving average, convergence, divergence. In other words, just think about the moving averages from a 12-day, 26-day, 9-day. We look at a 200 moving average as well, and a 20-day. But when it comes to that MACD, you want to pay attention to this at the bottom. This is all saved. So when you indicate this on your Robinhood, you could actually go save the MACD, the RSI, your MA for 50, and your moving average for 10. So these right here, your moving average for 10 and your moving average for 50, they are actually on the chart. So when you look at the chart, you can see them on the chart. Your MACD, though, is at the bottom. So kind of get familiar with where you have your MACD. You don't have to have these on there if you don't want them. Think about what I just did. Now they're gone. But I still have the MACD here at the bottom. The reason why I want to pay attention to this is because when you have your MACD crossing, you can see where you have an upward movement and a downward movement. So when your moving averages cross over each other and the smaller one crosses over the larger one, you can expect the stock to go down. So see how they cross right here, blue and red lines, and then we had an instant downward movement. Over here, we crossed it the other way. And now we went up for a little bit, we kept going up, and then we're at the point where we're crossing over again to where we're going to go down. As you can see, your MACD right here, they are very, very close to each other. You see a lot of green, a lot of volume in here. So I expect a little bit of a pullback to where we can, get a good price point to get in. I also say that because if we looked at one other indicator that I use, the relative strength index, we're hovering right around, 60, 50-ish. An indicator of 70 means that I've completely overbought, which means I have a lot of people buying it. Overbought means you have a lot of people buying a certain stock. When it's oversold around 30, you have a lot of people who are selling it. So right now we're roughly in the 50s. So we're give or take, we could technically, if you look at the RSI, we still have movement to go up. But at the same time, when you look at your MACD, I can tell that Microsoft is going to go down. And so when I look at the 1 month, I see that they're even closer. And then when I like to go for the year out, we have room to go down before we go up. As you can see, the gap is bigger here, so we do have room to the downside on the year. One of the famous words that I learned when I started looking at charts was, when in doubt, zoom out. And so when you zoom out to the whole year, it's a much clearer map or chart of what it is if you have indicators that you want to look for. On this Robinhood app, the one thing that I cannot do is draw trend lines. I don't know if can you see this chart on the Webull? No.
No, stop sharing and start back.
Let me stop it, and let me see if I can get the Webull in there. No, it's not one of my indications. No, so it's just, I got the Robinhood. So everybody can see this Robinhood?
I'll put it back up. All right.
Okay, so when you look at the Robinhood and you look at these MACDs and you look at your candlesticks, I want to show you one more thing that I look at when it comes to the chart. Just take a look, keep looking at Microsoft. So I'm going to go on a 1 week. Okay, so on a 1 week chart, we talk about going up and we talk about going down. Something that we can see when we look at it strictly from an eye test and an eye view is I want to show you something. So if we weren't looking at the MACD, if we weren't looking at, the RSI, and if we were looking at the chart itself, I want you to see where we are right now. So if you follow my cursor, we are at the end. We are 371. We have been going up from this low point right here, 368. Then we hit this 370. We had a little bit of a down, but then we kept going, and now we're 371. You look at that and you think, oh, that's really $1 difference. But that little line right there is significant because you had a downward. See the little downward from here to here? Even though it's only $1, we are now here at this next up. What I want you to look at, though, is if we continue to go upwards, okay, I'm going to say that again. If we continue to go upwards, the next bit of trouble on the chart, from looking at it through the lens of a regular, retail trader, is I see this spot right here. So at 372.84, I see a little bit of an upward spike because that is my next gap to fill. So I'm going to say that again. When I have a gap to fill, that means I'm going to fill the distance between those 2 points. And it's either going to gap fill up or gap fill down, and I'll show you that in a minute. So if I'm looking at Microsoft on the 1 week chart, now this is a 1 week chart. This is not a year to date. This is a 1 week chart. I'm looking at it, and I can see Microsoft making another $2 move to around 373, 374. If it breaks this gap right here, I can see it getting, right up here, closer to 374, until we get to this point. So at 374, now we got a bit of more resistance because now we're getting toward a double top. So if you can see this top right here, 374, and this top right here, 374, we have two areas that hit the same point, and they were at the top. That is why it's called a double top. Okay, let me repeat. We are here, which is a crucial area for us. If we can gap fill to 373, break that gap and go to 374, we will have hit our third, not one, not two, but our third top at 374, which means we will come down. Remember, we were talking about a, potential pullback. We were talking about what's happening with Microsoft recently. We've been talking about the price action. And like I said, we've got room for it to go up a little bit more. And then we're going to come back down. So let's say we hit 374, and let's say we start the pullback. Our first gap to fill on the downside is going to be 370 because of the fact that we got to this point, 374, and this is where our next gap is when we come out. And then our next gap, which is our next lower point, think about gaps as the high point and the low point. So when we gap fill up, we're hitting that previous high. When we gap fill to the bottom, we're hitting those previous lows. And so in the event that we get to 374, we pull back to 370, we could come down to 367, 368. And lo and behold, if you go across, what do you see here? We see a 368 here, a 368 here. We have two bottoms, right? And so if we had a third bottom, we would have a triple bottom. So what does that mean? That means we were due for a bounce again. So Microsoft could be potentially bouncing up, bouncing down on that gap fill, and according to that MACD, and we can just watch those levels. In the event that all that goes south, ladies and gentlemen, and we have a gap fill to the bottom, we can see a potential pullback to 365, and then we could see one at 363. Now, let's look at our year to date. If that were to happen, and we were to get a nice pullback to the gap, see where we are right here? See this next gap right here at 357? 357 could be somewhere of a make it or break it for Microsoft. And then bam, 326. Now, I don't anticipate a 326. I just don't see it getting there because I think we'll bounce if we get down to the 360 area. But definitely, if we break that 360 on the downside, we could definitely be heading toward 325, 326. And so if you just look at it again on the week, if you can see my cursor and you can see the tail end of this, if I were to be able to draw on it, I would connect this line, and then I would connect this line, and we would have a triangle. We could see this area right here as a pole, a straight line. So I see a potential for a bull flag on the 5-day chart for Microsoft to get us to 374, 375. If we end up breaking that 374, double top, I can see us hitting 380 back to our all-time highs that we just had not too long ago.
1 minute, Jose.
All right. So, but like Kendrick was talking about the VIX, I want to talk about SPY and just show you this. SPY is the overall for the market in general. And I just want to show you that over the year, our market is up over 10%, 20%. So like KT says, we're getting close to having a bit of a pullback. If you look at SPY on the year to date, we can see all these gaps. If we were to break down, we don't want it to break down to 410, but we definitely we want to take a look at that because we are approaching all-time highs. Okay, now hopefully I can maneuver the Webull to get you to look at that in the future because I really like that chart. But if you have any questions, please hit us up about Robinhood. Looking at these charts, just get yourself familiar with candlesticks, a day chart, a month chart, a week, and a year to date. Start taking a look at those. Do a little research on MACD because that is very, very significant when it comes to identifying trends when buying and selling stocks.
That is. Look, look. Y'all asked for it. I told you. Y'all asked for it. Now, when you see now, you be like, well, what is he talking? I told you, you got to slow play that thing, man. Jose just dropped something. Now, if you can figure out what he was talking about, you can get some money in there. But you got to go through and figure what the hell he was talking about. All right, now, this is what we're going to do. We're going to take a quick break. And when we come back, we will get into, because we are no longer looking at Robinhood for our platform probing. Now we are going to go inside of Merrill Lynch, right? So that's what I use. We'll be able to kind of look at that platform. Maybe you want to try little things, especially if you have Bank of America, then this is with Bank of America. I just kept it simple, right? Didn't even leave the house, just stayed at the house. All right, so now, awesome information, though, Jose. Big shouts out to you for going over that technical analysis. I'll Fabian, let us know if you think it'll be good to come back out and look, or do you just keep going through that and then eventually you hear it so many times you catch on and you start having those aha moments. So feedback is always good because technical analysis is very, very, very hard. All right, man, we're going to take this quick break. And when we come back, we will jump into platform probing. Merrill Lynch tonight, Bank of America. Let's go. All right, y'all. Welcome back to the Administrators Podcast. This is KT and
JoJo.
Still in the building, y'all. Episode 6, man. This is our 6th time getting into all of this work. Where we go? Oh, she look, see, she just gave us a thumb up. I told her. I tried to tell her, man. We got a few episodes before we jump into that work. Look, man. Right now, what we're about to get into is another platform probe, right? We done went through Robinhood. We done figured out stuff together in Robinhood, stuff I didn't even know Robinhood had. Now, tonight, like I said, let's take a look inside of Merrill Lynch. We won't go too deep because that's my real account. But we're gonna do a little something. All right, y'all. So, I was paranoid today. Did I get? Hold on, man. I think hey, chill out, bro. See that one? Okay, look, y'all. This is the homepage of Merrill, right? And so, I like I say, I didn't know anything but to show my own account, man. I apologize, y'all. So the biggest thing we talk about tonight is we're going to go through, and I just want to kind of look at something as the homepage. So when you get in, remember, it's always good to make sure that you have your, hold on, let me get here real quick. Yeah. So to make sure that you have your indices showing. So if you can look, I got my Dow right there. I got my NASDAQ. I got my S&P set up, 10-year. Now we had a 10-year auction today. So where I thought my TMF was going to drop, it came through for me at the end of the day, right? So let's see if y'all can look over here. Oh, it was a rough year, y'all. I ain't gonna lie to you. It was a rough year. Let me see if it'll show it as a table. Oh, it won't even show it as a table, but look, right here, it was rough. This is a good one, y'all. 34%, man. We made that thing grow by 34%, y'all. So just just keep that thing rolling, right? So let's go to I like to go into some of the research tools that they have. I know we showed a lot about that on Robinhood for the first point, right? So let's jump into some of the market tools they have. So when we come over here, we got our market briefs, kind of looking at. Hold on, wait a minute. Is this the right place, or did they log me out? Hold on, wait a minute, y'all. I'll tell you, man, this is live. Oh, wait a minute, y'all. I can't show you that. Hold on, let me wait a minute. Let's take a second. Time out. Let's take a quick break. Hold up. All right, Joe. Let me see if I need to log back in. I don't know what just happened here. Okay, let me see here. And I tell you, man, if it ain't one thing, it's another.
Gotta love it. Gotta love it. Hey, everybody, while we wait on KT, I want to let y'all in on a little trade secret. There is a platform out there called Start Engine where you can invest money into that as well with all these new and up and coming companies. And 5 years ago, I put some money into Start Engine for a electric vehicle that flies, like a little, I guess you want to call it an airplane, helicopter type thing. And I bought some shares. And today, they actually merged with a company that is on the NASDAQ. And they had a little bit of success today. However, the stock itself is sitting at 7 cents. So what I say that to say, INPX. Anybody listening? INPX, 7 cents. I think they're going to do great. They had the merger, so just go out there and see what you can do with some INPX. $70 gets you 1,000 shares. Hold
1,000 shares, baby.
Hold that for as long as you want to, and then who knows?
Run the bag back up. All right, y'all. So this is my rainy day. So in here, I just said let's cut to the meat, right? So in here, talks about the cash to invest. A lot of this stuff is just still reading the daily value, right? Unrealized gains. If you can look in this account right here, because I am playing some high yields, it is down a negative $393 overall. Right? I don't think that's too bad, but yeah, it could be better. So if you look, this is some of the things right here. This is how it shows your portfolio on your home page. If you look, there we go, right there, man. Look at that TML, man. Hold on, wait a minute. So we got a little Alibaba in there. We got that draft, baby.
Boy, that draft.
We got right here. This is SQQQ. I told you, man. If this crash, if at any event the stock market crash, y'all, we going to the moon. Do y'all hear me? Next, and also 30 of these TMF. So remember what I told y'all when we get ready to look at these bonds. We're not just talking this, right? This is my real account. So right here, TLT, right? Getting ready. Starting, I sold out of some of them, but I'm coming back in slowly but surely. But I didn't sell out of these here, but they did just have the reverse split. And so the 300 that I had, they went a 10-1, where if you had each 10 shares would turn into one. So they just did that. And so now my 300 went to 30, right? But 30, $56. And so when you look at that, you can always see like how much did you get in. I don't even know, but I know I'm up $200 on this right here by itself, right? And so these are just some of the ones that I have in this account. But this is what it talks about when you're kind of looking at your portfolio story. And so this is what your front page would look like. So next would be kind of going over to let's say I want to go and buy a stock or something of that such. When I'm looking, so let's say I want to buy, then I'm gonna say maybe Apple. right? So with this one, it is, I ain't gonna lie to y'all, it is very, very technical. Very technical, right? So let's say you want to do 50 shares or something. And then it's going, once again, it'll kind of show me how much for each one of those shares, right? Next thing is, remember over here, this is what we talked about. This is our risk management. Hold on, let me get back to the page in case. Okay, yeah, there we go. So this is how we look at our risk management right here. What kind of order is this going to be? And so, class, what kind of order should this be? Wait, I'm waiting. Okay. I didn't know if I heard the right answer, so I can tell y'all. It should be a limit order. Okay. So if this price is $193.18, that's how much I'm willing to pay. I may can even go a little bit lower, right? Because look at this. It went between 191.42, 193.49. Right now, this is where it's at. Who's to say today it won't come back down to 191? If I do my limit order when the market first opened, I may can get a 191 today, but I just have to wait and see. But remember, always limit, because that's how you want to tell the market what you're going to pay. And so this is how you set a limit inside of Merrill Lynch, right? Once you do that, you go through your preview order, and that's pretty much buying an order. I know Robinhood lets you do a little bit more. We don't do too much. It's rough, man. We get them out the market, man. 4 to 8, baby. So what is that, 7 o'clock? Is that when Robinhood stopped too?
Yeah, I think now they do.
Yeah. So we got that to 7 o'clock. I think I'm gonna come in and make me a few moves tomorrow just to try it out. Okay, so we already talked about some of the research tools that we have here. And so one of the biggest ones is creating a watch list, right? So once we inside of this Merrill, remember, I always want to make sure we are able to look at our upcoming things. So maybe we'll say 2024, right? This is 2024 pack. Y'all know me. I got to get the pack. So what's going to be at the top? I ain't going to even lie to you. That's what I got my eyes on for 2024. All right, I need to figure out when it's going to drop. How can I get in this? But this is my watch list. So I just typed in, boom, save and close. Now I got a watch list. Bam, there we go, right? And so when I get ready to buy it, all I'm going to do is hit trade. And some kind of way, they're going to figure out how to take my money. I don't know how they're going to do it, but I guarantee you they'll figure out how to transfer that money over when I say, let's go. All right, let me see. I don't want to get too intricate tonight. I just wanted to kind of introduce us to a little bit of the platform. Let's see here. So coming over here, my summary, my portfolio story, my balances. The biggest thing is always just looking at your current holdings, right? Because you always want to be on top. You have to be your own firm manager, right? So you always want to be checking, okay, when is it time to move over? And so for me, I'm a little bit different because while I have 2 accounts here, I use one for this one here is my trading account. Like I only do trades in here. That's why you see a little bit more in this account versus I don't even know how to get to my regular account, bro. How you get to it? Okay, versus yes. So versus going to this account, which is the one I use for options, right? And so with this one, it's still the same, but if you'll notice, total different situation what I use for this, correct? Let's see here. Yeah, that's it. I just kind of keep a little bit more. So I'm trying to look and see if I see the holdings in here. So current account holdings. So remember what I said, it will be no. Yeah, so these are the options that I have right now. Man, what you think about that, man?
Oh man, let me see what you got there.
Let's see what's happening over here, man. What is this? Trash. Get somebody out here.
Boy got them puts.
Oh yeah, man. Look, y'all. I told y'all it could be coming down, right? So we got to be ready. But I just want to really just kind of go through this platform and kind of just show y'all a little bit of what things look like inside of Merrill Lynch. But like I say, these are still just options. We're going in, we're buying our puts. We just kind of closing this thing out. It's some of them rough, some of them making it happen. You know, so the biggest thing is that one right there. That one right there, y'all. This was a good one today. I'll just let y'all know that. Because this started at 16 and it went way over this. So yeah, man. Now we got that put. That's what I'm finna creep back on because that's January 19th. So we're gonna slide back into that. So just another way. Remember, research our guidance, our rewards, our benefits. Over here, let's say I want to search. I always think of Apple when it comes to mind. I want to know about the Apple. Here we go, right here, right? So once I do that, remember what we said. What are you doing to research? So they'll let you read Apple's stock story. Wow, this is awesome. So what does it tell us? Apple, hold on, let me check my time. Oh my God, we was freestyle so long. I gotta shut this thing, man. Jose is not the time dude here, man. Okay, so let's look at this.
I didn't want to start with momentum, man.
Man, look, man. 30% profit margin, right? 35.89 1-year performance. But look what just happened. Look what just happened.
Oh,
they say it's neutral, right? So you always want to be able to come over here, look at things, to be able to kind of understand a little bit more of what's going on with you. That is Merrill Lynch in a gist. Next week we'll come in and we'll look at some specifics on Merrill Lynch, how to set up your account. Is that something you want to do? Remember what I said, if you are with Bank of America, it's very simple to go in and get you one of those accounts. I ain't gonna lie to you. See, I got 2 of them, man. Just get in there. But put that money somewhere so that you can let it kind of make it some money. Anything on that one before we close it out, Jose?
No, man. I just think that, you know, as everybody looks through to go through, you know, we will be talking, you know, more chart, more patterns. We take a look at candlesticks as we continue to evolve on this podcast. So just, you know, I know we're a little fast and furious with that MACD and gap fill up and gap fill down, but that's what I look at. That's what I can just look at a chart and I can say, oh, so we're at this point. We just came from this point. So if we were to move down, we're going to get to that point again. Or, you know, we were up here, now we're here, but we need to get back to where we were. And so, you know, filling that gap, whether it's up or down, is what I look at when I look at charts for placing the orders.
And I think next week, I think we'll take a look at just going back to that charts and taking it back to the macro, looking at maybe just candles patterns, right? Let's look at candlesticks, right? Because candlesticks, so if you look at that chart all together, it's telling us a story. The question is, how do we understand that story? And so it's telling us when people are buying, when people are selling, when they're indecisive. All of that is learned right from that chart. So we're going to come back, break that down for you. But I think that's it, man. We already an hour and 3 minutes. We can keep this thing going, but we're not. So we're going to see y'all next week. This is KT and
JoJo, baby.
For KTTV, signing out. 100.
This is Darnell with Broadcast Houston.
This is Dr. Tamara Beckford.
Hey, this is Candace.
This is London Underwood.
This is Kirsten Bass with Inner City Greens, and you're watching.
Y'all are now tuned in to
KTTV.
KTTV.
KTTV.